The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hey, good morning, guys. This is Jacob Shute filling in for Tommy O'Brien. The allergies are raging, and we have some market news. First thing I want to say, just to riff a little bit, is I'm embarking on a war with this local gym. I tried to cancel my membership years ago, and they kept giving me this BS. Anyways, long story short, they continued to charge my card. I reported it as fraud, and I had them send me my contract that I signed, and there's nothing in it about the cancellation and the absurd hurdles you have to jump in order to cancel. It's obviously highly predatory, right? You either have to come in or you have to send a note, but that note has to be notarized. Again, that's not in the contract. It's wild. So yesterday, I called them and they gave me all my account information, and I said, okay, yeah, so why do I have to get my note notarized? I switched up on them, and they said, well, we can't verify it's you over the phone or if the note isn't notarized. And I said, well, you just sent me a bunch of personally identifiable information and you couldn't verify it was me. And then they put me on hold and said they'd call me back and then hung up the phone. Crazy people. Let's take a look at what we got going on today. Okay, so obviously you have Amazon, Eli Lilly, 3M, McDonald's, Coca-Cola. We got a lot of stuff going on. So let's take a look real quick at Coca-Cola, if I can pull all of the information up. All right, let me just pull that first. Actually, before we even do that, let me just run through everything right now. Obviously, we're pre-market, but we're slightly down right now in pre-market. Silver is taking a hit today, off about 3.7%. Gold as well, off about 1.8%, and then copper staying right up there though, $4.56 on the contract. Crude oil kind of staying stagnant at that 82 level, slightly down over the last few weeks. Then the dollar is still staying strong at that 105.96 area. Apple at 173.50. Disney continues to get burned a little bit, up from that little tick up to 122. Oh, that stock. And then the number one thing, which is bizarre, was Tesla. Of course, we'll talk about it. We're down 3% right now. The big news is, one, they're, cutting a bunch of people, right? So people are getting fired. And the number one thing that came out is Musk the past few days had been kind of cozying up to China and saying some positive things about them. Well, it turns out they got full self-driving approval in China. This is huge. So let's talk a little bit about that. Tesla stock soared yesterday following the reports that Elon Musk won Chinese approval to deploy the automaker's full self-driving autonomous software on the mainland. That was reported by the Wall Street Journal. Separately, Bloomberg reported earlier that Tesla will use Chinese tech company Baidu's street-level mapping data to power FSD. It's full self-driving. Tesla had been previously using Baidu's mapping data for satellite navigation in cars. Working with the Chinese company helped with regulatory approval. And again, what Baidu gets out of that, obviously, is pretty positive long-term cash flow. And that's the same strategy that I've been saying Tesla is probably going to basically utilize going forward. Now, as more data comes out on it, I get a little more unclear if that's really what Tesla is going to do. I believed in that very heavily, that they were just going to essentially sell this data to other car companies, but it really seems like Musk doesn't care too much about these more traditional ways of making money. And so really his idea is just to have the full service. It'll remain to be seen what happens with that. Tesla closed up 15.3%, hitting its highest levels since March 1st. Tesla stock is now up 30% in the past for trading sessions. Tesla charges $8,000 upfront for lifetime use of FSD and $99 a month. Wow. Adding FSD functionality in China is a big deal, of course, because this rivals a lot of the other automakers, and it can kind of help balance out some of the L's taken because of everything going on in the electric vehicle market. All right. All right, so let's take a look at Coca-Cola. What we got going on here. Coca-Cola raises outlook as organic revenue beats estimates. Been a nice little march up since the middle of this month, trading from low of 57.93 up to 61.89 right now pre-market. They issued optimistic 2024 forecast as first quarter results outpaced Wall Street expectations. Organic revenue, which excludes the impact of currency shifts and acquisitions, rose 11% in the quarter, above the average estimates of analysts. Obviously, they have Minute Maid, Topo Chico, mineral water. Topo Chico is getting hit a little bit in its demographic. A lot of people go to this kind of mineral water because it's viewed as healthy, right? So this idea is that this kind of tap water and even really the spring water you get at the stores is lacking minerals because of the purification process and the folk logic behind it. And I think this actually is backed up by some studies. But when you have low mineral content in water, can end up dehydrating you a little bit more. Regardless of the specifics on that, a lot of the people who are into mineral waters, that is a big thing for them. So Topo Chico was a natural kind of shift. The issue that came out with it, and I've been seeing online consistently, these videos get, anywhere upward of 100,000 views. And, I don't think that seeing stuff online should be kind of shrugged aside as like not important, right? Or just because this is the demographic, the people that buy this stuff. And they can either be the greatest advocates for it or the biggest critics, and it influences people. However, the Topo Chico supposedly has the highest levels of fluoride in any mineral water. And again, it doesn't, I think, for the business perspective, it doesn't necessarily matter if, the fluoride is bad or not. It's just the people perceive it as such. So I think Topo Chico is going to have some issues, but that's just one segment with Coca-Cola. Regardless, so the Coca-Cola now sees the same measure growing as much as 9% for the full year, up from the previous range of 6% to 7% and higher than the average estimates. At the same time, unit case volumes missed estimates, with water, sports drinks, coffee, and tea falling for the quarter. Coca-Cola said its prices, which have risen steadily in recent quarters amid higher input costs, continue to climb. The company hiked prices across a mix of its products 13% in the quarter, and that was more than the increase expected by the market. Let's see here too. Just like we spoke about with Pepsi as well, their overseas markets are helping quite a bit as well. Coca-Cola's organic revenue in Europe, the Middle East, and Africa rose by 15% in the first quarter, while in North America it increased 7%. That was the craziest thing I saw too. I was watching a documentary a little while ago on something, I believe it was like in Nigeria. These people didn't have like fresh water or anything potable, but they were drinking Coca-Cola. That's weird, man. All right, folks, stay tuned. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, welcome back, folks. Before we went to the break, we were talking about Coca-Cola. We'll just wrap that up a little bit. New product lines they're coming out with. First quarter net revenue rose 2.5% to $11.2 billion. On adjusted basis, the company earned 72 cents per share compared with the expectation of 70. The company maintained its annual comparable earnings per share forecast of 4% to 5%. And there you have it. Don't ever bet against the boy. Coca-Cola did all right. Let's take a look as well with PayPal up 5%. So what's going on with this? It raised a full-year adjusted profit forecast on Tuesday as the payments giant benefited from consumer spending. Measures to cut costs improved operating margins in the first quarter. Consumer spending has shown remarkable resilience, even as economic worries cloud the outlook for the payment sector for the months. The lower income brackets have curbed discretionary purchases. Most Americans are still looking to shop online, dine out, and travel. Like, we'll talk about this a little bit. I think, again, we are having a really pronounced, tiering of people with income here. Give me a second. I'm all wrapped up here with my cords. Cool. All right. Anyways, we'll talk about that in a second. PayPal's newly appointed management is also aiming to reignite investor confidence through efforts to make the company leaner and lower costs to ease pressure on its stock. Earlier this year, PayPal announced a plan to cut 2,500 jobs, which is 9% of its global workforce. The company expects 2024 adjusted profit to increase by mid to high single-digit percentage compared with its earlier forecasts of it remaining flat. PayPal also expects second quarter revenue to grow 7% on FX neutral basis, largely in line with Wall Street expectations. Total payment volumes increased 14% to $403 billion in the first quarter, while the net revenue climbed 10% to $7.7 billion on a currency-neutral basis. PayPal's upbeat payment volume echoes quarterly earnings at traditional card-based payment processors, Visa and American Express. The operating margins improved 84 basis points on adjusted basis to 18.2% in the first quarter. That's actually pretty wild. Its margins have been central to investor anxieties last year as growth showed post-pandemic. Good for them. Now, some interesting stuff. We have SoFi, which I am just beaten by this company. What are we at right now? Okay, so they had okay forecasts, right? I don't know what the path for this company is. This was a what's his name? Chamath, that SPAC guy. This was his baby, and let me see if we can see how nasty this was. I don't need a one. Yeah. And then it just stayed in this kind of area. It started selling up 2487, and we haven't seen a lot of movement. They've done a really good job of trying to get their name out there. I believe they have a football stadium named after them, SoFi Stadium out in Los Angeles. They've been trying to break in to the student loans market. Anyways, I don't know what the path for this company is, and every time there's earnings, it's this is it for the company. We're gonna move on up here. And I mean, I think they're still a nascent company. I mean, when was this? 2021? Yeah. So I mean, it's 3 years for a new bank. Anyways, let's take a look a little bit. I believe they also had it was called Galileo. I'm trying to remember what the tech was, but it was a decent acquisition on their part. Anyways, let's speak a little bit on this financially speaking. Reported Q1 2024 revenue of $645 million, which is a 37% increase year over year, surpassing the estimated $556 million. Net income, they achieved $88 million in net income, significantly exceeding the estimated $18.83 million. Whoa. EPS was at 0.08, and the diluted EPS at 2 cents, with basic EPS meeting estimated at 1 cent and diluted EPS surpassing it due to adjustments. The EBITDA posted $144 million, marking a 91% increase from the previous year. The strong profitability and operational efficiency. Net interest margin expanded to 5.9%. Full year, this is what really matters, full year 2024 revenue guidance was raised to $2.3 to $2.43 billion, and net income guidance to $165 to $175 million. Pretty neat on it. SoFi's lending segment saw a slight decline in GAAP net revenue by 2%, but maintained flat adjusted net revenue year over year. However, significant growth in the net interest income, up 33% from the previous year, reflects strong demand for personal loan products and robust performance of balance sheet assets. Technology platform segment reported a 21% increase in net revenue year over year, with contribution margins improving significantly. This segment's success is attributed to effective client onboarding and strategic sales initiatives that have diversified and scaled revenue streams. Financial services segment experienced an 86% surge in net revenue, driven by substantial growth in interchange revenue and net interest income. And that's something important to know. This segment's performance is particularly notable, with SoFi Money, SoFi Invest, and SoFi Credit Card contributing to record high revenues. That's about it. That's at least relevant to what we're talking about. I still just don't think it has, shown anything substantial for now, right? I mean, maybe at this level it's okay to buy, but I don't see again where it goes anytime soon. That blows this stock up to a point where it makes sense to invest. Anyways, that's my opinion on it, and you always should do your own kind of research on that. Let's see okay, this is nuts, right? So give me 1 second to pull it up. One moment. Okay, so BYD, we were speaking about them. I just wanted to get the Okay, so BYD, we were speaking about them because they had sold so many units. They had like 70. This is what was competing with Tesla, right? They had sold like 70. Excuse me. They had reserved 70,000. With everything sold over like a certain period of time, which I believe was like within a year or like for this year, would have totaled about 100,000 units it would have sold, which is pretty nuts. But they missed revenue because of the discounts, and this is what everyone bought. So it's like they were giving away their cars almost. So quarterly sales of passenger electric hybrid cars rise 14%, but the slashed prices screw them over. We'll talk a little bit about that when we come back.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26, Tigers. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. I'm chatting in the den right now. If you're not in it, you've got to get in it. All right, never mind. Let's keep doing this. We were talking about BYD. Give me one moment. Okay, yeah, right. So revenue misses estimate as China EV discounts takes toll. BYD company's first quarter revenue miss estimates as aggressive price cuts across the board. Most of its lineup ate into its financial performance. Net income rose 11% year on year to 4.57 billion yuan, which is $631 million. In the 3 months ended March 31st, revenue grew at its slowest pace in 4 years, up 3.9%. That's well short of analyst estimates of $132.53 billion. Wow. Sale of passenger cars, electric, and hybrid vehicles rose 14% year on year in the first quarter to just over 620,000 units, while the exports spiked 153% to 97,900. After unseating Volkswagen as the top-selling car brand in China last year, BYD has moved to shore up its position by slashing prices across its range. Its cheapest model, the popular Seagull hatchback, starts for less than 10,000 USD. Dang. BYD is also pushing. I wonder if that would be like a cool thing to import here. I mean, I don't know. I don't know what these things are like. And when I was in Eastern Europe, they were flooding the market with electric commerce vehicles, and the things were not good. But that was a few years ago now, too. So BYD is also pushing into the premium and ultra luxury end of the market, of course. They have the Denza. Meanwhile, the EV giant's international expansion, including selling models at a higher price, is helping to offset the price war in China. Fascinating. Anyways, I thought that was just really interesting. And I wonder, like, if that's just a way for them to kind of keep their head above water during a really kind of intense period before the dust settles on that. Let's see here. Okay, Volkswagen, because we just spoke about them, have some issues as well. So German car maker Volkswagen on Tuesday said its operating profit dropped by 20% in the first quarter, as weaker demand for its premium brands drove a drop in sales. Operating profit came in at 4.6 billion euros, 4.9 billion USD. In the first 3 months of 2024, the company said in the same time period in 2023, operating profit was 5.7 billion euros. Volkswagen cited lower sales and higher fixed costs, as well as an unfavorable country, brand, and model mix. It's key. That's a pretty big mess up, huh? As key factors in the profit decline, vehicle sales were down 2% in the first quarter, totaling 2.1 million units, the company said. As expected, our first quarter results show a slow start to the year. The car maker's luxury brand Porsche saw operating profit decline to 1.2 billion euros, down from 1.7 billion in the first quarter of 2023. The unit sold 71,000 vehicles globally in the first quarter, a 16% drop compared to the 85,000 the same year prior. Lower volumes related to product development as well as customs related delays. Volkswagen still expects to reach its 2024 financial targets, including a 5% rise in sales revenue and a full year operating margin ranging between 7% and 7.5%. We expect additional momentum over the course of the year from the launch of more than 30 new vehicle models across all brands at the same time. Let's see. Yeah, that's what I have. Right on. This is crazy. This is like it came out yesterday, so I just got an update for it. And it's nuts because I'm talking about. I started this. I know a lot of you guys just came in like just now. Well, first let's say the market we're open right now. The E-mini off about 0.28%. Russell down 1.2%. NQ's off about 0.28%, YM off 0.46%, gold down 1.78%, and then silver still down nearly 3.25%. We'll see what that does throughout the day, and then copper down 2.22%. Crude oil sideways. We have some movement at 30 year. Doesn't matter that much. 10-year, however, we are off a little bit. I think these rates are staying higher for longer. We're going to have the Fed come out, or at least Powell come out on Wednesday, and I don't think it'll be a dovish statement at all. I think inflation still persists. I think we also have a weird problem, too, of whether or not these, high levels of inflation are going to, one, affect debt servicing, which obviously they will. And then does this become like an unmanageable problem? And then do you start getting, again, certain segments of the population who are just making so much more money because they're in this kind of environment while you're simultaneously crushing common people? That's a problem, And we're seeing inflation is continuing. And this is This is from the AP, or AP as well. The affluent Americans are driving U.S. economy and likely delaying the need for certain cuts. Crazy. Just reading this article. Yeah, this is what it's saying. Older Americans are fueling a sustained boost to the U.S. economy, benefiting from outsized gains in the stock and housing market over the past several years. They're accounting for a larger share of consumer spending, the principal driver of economic growth, and much of their spending is going towards high-priced services like travel, healthcare, and entertainment, putting further upward pressure on those prices and on inflation. Such spending is relatively immune to the Federal Reserve's push to slow growth and tame inflation through higher borrowing rates because it rarely requires borrowing. Affluent older Americans, if they own government bonds, may even be benefiting from the Fed's rate hikes. Those hikes have led to higher bond yields, generating income. Okay, right, we all know this. Yeah. I don't know. Again, I think this is a really rapidly, I mean like, on the year, changing economy, and these old traditional ways of doing things need to be looked at and kind of rectified, or at least have a new approach to it. Okay, anyways, what I wanted to talk about, because I got an update for it, and I thought this was crazy, because I was talking about earlier in the program, I started off talking about this war I'm having with a local gym who's refusing to cancel my membership. Okay, I've done this whole thing with them. I'm not going to go through it again. But the point that I was gaining from it is, there's on principle, these kind of predatory practices shouldn't happen, right? And I was reading, I just had them send me my contract before I said anything about cancellation, and they're not clear whatsoever about it. And, you either have to go in, I don't live in the area anymore, so that's not going to work. They want to send me a note. I send a note to them. They're like, it needs to be notarized. It's like, you didn't tell me that. It's not in your thing, and blah, 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 right? And they're doing this stuff because governmental bodies allow them to get away with it, right? I mean, it's obviously extremely predatory, right? I was reading something online where they send a dude, so this is a news story, to collections on $13,000, which is nuts. Okay. So why am I using this as a segue into something? Well, the FCC has fined wireless carriers millions for sharing user locations without consent. And the point is that some of these companies, and a lot of them, will just do things because no one's telling them they can't do it, and they're not okay things, right? And they're making a ton of money off the data as well. So folks, stay tuned. We'll just run through that quickly when we get back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, welcome back. We're talking about the FCC finding wireless carriers. They are sharing user locations without consent. The U.S. government has issued millions of dollars in fines to AT&T, Sprint, T-Mobile, and Verizon after an investigation found the nation's top wireless carriers had illegally shared customers' data without their consent. The fines stem from allegations in 2020 by the FCC that for years the company had improperly shared users' geolocation histories to third parties, including prisons, as part of their commercial programs. Right on. The fines target a practice in which carriers shared user location information with data resellers known in the industry as location aggregators. These aggregators pass the data onward to third-party customers. Despite promising to stop the tactic after press reports in a congressional probe brought the issue to light in 2018, carriers took nearly a year, or in some cases even longer, to finally stop doing so. Each carrier attempted to offload its obligations to obtain customer consent onto downstream recipients of location information, in which many instances meant that no valid customer consent was obtained. The FCC said AT&T must pay $57 million, while Verizon was fined nearly $47, Sprint $12, T-Mobile $80 million. Dang. Since the investigation began, Sprint and T-Mobile merged in 2020. Verizon said it is, quote, deeply committed to protecting customer privacy. That's why you sell it to third parties, right? Without the consent. In this case, the company said in a statement, when one bad actor gained unauthorized access to information relating to a very small number of customers, we quickly and proactively cut off the fraudster, because you're not making money on it. T-Mobile said in a statement its location data sharing program was discontinued more than 5 years ago after we took steps to ensure that critical services like roadside assistance, fraud protection, and emergency service. Okay. We take a responsibility to keep customer data secure. Very seriously and have always supported the FCC's commitment to protecting consumers. But this decision is wrong and the fine is excessive, and we intend to challenge it. Yeah, I don't know. Obviously, I don't think anything huge will come of that, but it's just to put things in perspective. Oh. Give me a second. Okay, we'll talk a little bit about McDonald's. Okay, off a little bit, off about 1% this morning, trading at $270.69. McDonald's Q1 earnings missed sales expectations. McDonald's customers may be thinking twice before grabbing a Big Mac and fries. The chain posted Q1 results that missed revenue growth. What a weird non sequitur, right? Okay, chain posted Q1 results that missed revenue growth and same-store sales estimates across its segments, while its earnings also came below expectations. Consumers are more discriminating with every dollar that they spend. That's the CEO said that. The fast food giant posted revenues of 6.17 billion, up 4% year over year and slightly higher than Wall Street estimates of 6.15 billion. Adjusted earnings per share is up 2% to 270, below expectations of 272. Global same-store sales growth was 1.9% year over year compared to 2.33% jump that Wall Street was hoping for. U.S. same stores were up 2.5%, slightly off from 2.55% expected. The higher menu prices boosted the average check twice, while marketing campaigns and growth in digital and delivery help bolster sales. In international markets where McDonald's operates its own stores, same-store sales were up 2.7%, compared to the 12.6% growth seen a year ago. Europe, Latin America, and Asia saw positive sales growth. And, the biggest, rip-off that we get is McDonald's in other countries is crazy. It's very good. I don't know, obviously it still caters to the same people, people who need to get to work early in the morning, the drunks at 1 a.m., but super delicious. And it'd be interesting. I remember McDonald's was going through this whole process, the breakfast all day. They tried making more craft sandwiches and selling them for $8, and they're missing the point on that. Which again, it's demographics, or people going to work and people who are out late at night and want to eat, and they need to lean into that. And I'm surprised they haven't done something, on the menu where they're bringing, the best options from McDonald's Japan or McDonald's Europe or whatever, and trying to run something like that. It's interesting that they haven't done that. Regardless, several markets in the Middle East and some outside the region are experiencing a meaningful business impact due to the war and associated misinformation that is affecting brands like McDonald's. And that information is that they're supporting certain sides in the war, financially, or at least politically. The company's loyalty program played a key role in its performance as consumers look for value and deals. Loyalty members brought in $6 billion in digital sales across 50 markets during Q1 and $25 billion for the past 12 months. Interesting. I still think they're okay, but the price hikes is a major problem, especially because you go to McDonald's for cheaper goods, and I'm surprised they're seeing that increase. Especially because it doesn't seem like it's such high quality food. Anyways, we'll talk about Walmart a tad. Off about 0.83% currently. Still very nice movement up, kind of just a consolidation period until any better news comes along. And I'm sure we'll stick in that for a little bit. But this is, decent volume, to the upside. And, yeah. Let's take a look. Walmart is stopping the health centers, virtual care services, and latest failed push into healthcare. Walmart said on Tuesday that it will close all of its healthcare clinics across the country, which is a stunning reversal of its plans to bring its low-price reputation to dentist and doctor's office along with grocery aisle. The big box retailer said it would also shutter its telehealth provider, which required for an undisclosed amount in 2021. Walmart will close its 51 clinic locations, Florida being actually a huge one. Plans that won't affect the company's 4,600 pharmacies and more than 3,000 vision centers. The clinic will close over the next 45 to 90 days. Two people familiar with the matter told CNBC. Walmart blamed its plans to close these clinics on a broken business model. In the release, it described the move as a difficult decision, but said it couldn't operate a profitable business because of the challenging reimbursement environment and escalating operating costs. The shortage of healthcare workers in the U.S. has also increased the company's labor costs. The announcement comes just a month after Walmart said it planned to double the size of its clinic footprint by opening 22 new locations this year and more in 2025. Walmart's announcement is also another sign of how challenging it is to disrupt and radically improve the American healthcare. Obviously, we've been speaking about that a little bit. It's expensive. Yeah, it's just difficult. Walmart opened its first Walmart health clinic in 2019. It is crazy to have it cut so quickly. I mean, really. Healthcare services came with a low price tag. Yeah. Anyways, I'm glad their clinic, or excuse me, the pharmacy is being hit, because that's actually really positive for them. At least in St. Pete, I think you have one pharmacy in all of the South Side, but you have two near Walmarts, and both of them have pharmacies. And so it's really nice to have people in different income brackets having access to it. And Walmarts are also a little bit more secure as well than CVS. Folks, stay tuned. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com. Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, welcome back, folks. Jacob Shoup filling in for Tommy O'Brien. We have a short segment right now. Talk a little bit about Samsung. Good profits from the AI boom. That reversed the chip losses. Gay. The world's largest memory chip maker reported net income of 6.62 trillion won. That is 4.8 billion for the Yankees out there in the March quarter versus the average analyst projection for roughly 5.6, which is like 4.1. That's more than 4 times the company's earnings a year earlier. The results underscore how demand for the memory chips that power modern electronics and artificial intelligence is starting to rebound after a severe downturn. The company's shares rose 1% in Seoul trading. Looking at the profitability of individual business divisions, it is evident that semiconductors, especially memory, performed exceptionally well. Samsung is the world's largest smartphone maker. Signs are pointing to a gradual market rebound. Also, Samsung rules Korea. which I had no idea about. I watched this documentary on, I forget what they call them, but it's like the super wealthy elite of Korea, and they're very like monarchical in their behavior. And I didn't realize just the stranglehold that Samsung had over Korea. I mean, so many things in Korea are owned by Samsung. Different services, the politicians cater to them. It's pretty nuts. Obviously, the Galaxy phone, which is doing very well for them as well. Kyung Ki-hyun, who leads Samsung semiconductor business at the company's annual shareholders meeting in March. The division should recover to 2022 levels this year as the long-standing slump begins to end. The company averaged higher operating profits over the quarter of last year. Fascinating. All right. Short little story after this. The office loan defaults are near historic levels with billions on the line. Over 38 billion of U.S. office buildings face loan defaults, foreclosures, and other forms of distress. Again, a lot of this is held by these smaller banks, regional banks. I think we will see those guys kind of collapse if something isn't done with this. But our larger banking institution, I think, is fine. Folks, thank you so much for joining me. Down with the gyms. I'll probably see you tomorrow. Take care now.